Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade and what should be your investment strategy in the markets as we speak. We'll also get you expert views on all of this and much more. But first up, a quick check on how the markets are doing at this point in time. Well, halfway through the mark, and we can actually see the markets are actually trading with a cut of 0.6%, 18,142, 61,331 for the Sensex as well. That's a cut of 416 points. Remember, yesterday we had seen a sharp bounce in the markets, but today seems to be that the bears are returning to the D Street. What's really weighing on the markets? It's the pressure in the financials and the Nifty Bank. That's down by over 1% today. Financial services names, including the HDFC Twins, that's really dragging the D Street in today's trading session. Of course, changes in the MSCI and those worries on that have actually led to a pressure on both these companies' stocks, and that's despite the kind of strong results that we've seen from HDFC yesterday. In Q4 as well. Both these stocks are now down by over 5% each, and HDFC Bank in fact touched record levels in yesterday's trading session as well, and despite that we are seeing a cut of 5.3% in today's trading action. Tata Steel down by almost 2% odd. Apart from this, you're also seeing some more pressure coming in on Hindalco, NTPC, UPL, so some losses being also seen on the metals pack in today's trading action. Infosys, BPCL, Cipla, the other losers in this trade today, over 1% cut for all of them. When we talk about the gainers, you can see that after the results, it's Titan that's shining brighter, 2.7% uptick for this one. ICICI Bank also up by 1.5%. Maruti gaining strength as well. L&T, the other major capital goods mover in today's trading action. Adani Ports has recovered 1.4% up, and Ultratech Cement, the other major mover in today's trading action. The FMCG gainers also include Nestle and ITC after some pressure that we saw in yesterday's trade. But let's welcome our guest on the show. Mr. Kranti Batini joins in from Wealthman Securities, the Director of Research for Equities. Mr. Batini, welcome and thank you so much for taking the time out for this discussion. How are you looking at this pressure on the markets today? Almost a 500 point cut on the Sensex. Is it going to be temporary? Are we going to see strength back coming into the markets yet again?
What we can see is, Sakshi, we have rebounded very well and market was trading at a firm note. Whenever the market is around that 18,200 level, some kind of short-term profit booking we are witnessing. Market is going to bounce back because the macro economic environment is quite strong. We have a good setup in terms of the GDP numbers, and also all the macro environment is strong for Indian market. But the global cues also extremely important for the market. Currently, what we can witness is market is going to be in a complete range bound in next few days. We have not seen any kind of disappointments in last week in terms of the earnings are concerned. Earnings are quite robust in the companies declared in the past 1 week. Overall, we had a mixed quarter. We are still in the middle of the earnings season. How these earnings are going to pan out in next couple of weeks, that gives the direction for the market. But overall, we are going to be range bound for the market right now. And the range can be Nifty 18,300 to 17,800. This is the range one can need to look forward for their trading positions and investment position. But market gives any dip like this today, definitely it's a very good opportunity for the investors to take their positions.
Absolutely. Now, you did mention that the earnings have been quite robust, and that really led markets to a firm footing before this kind of a knee-jerk reaction that we've seen today. Another set of numbers that we are looking at is from the new age companies this time around, and this space has been the most watched space and most anticipated space by investors as well. I'm talking about Paytm, which is scheduled to report its numbers tomorrow. Now, the company is in fact trading higher today in an otherwise weaker market. We saw Paytm shares climb about 4% in trade today. Right now also it's trading around 2.5% up, and most of the analysts do expect good numbers this time around due to the steady loan disbursements and also the new device additions right there. I wanted to understand your own sense on Paytm, and ahead of earnings, what should investors be really looking at from the earnings, and the strategy that they should have on Paytm?
After a sharp recovery, actually the management guidance of last quarter is extremely important for Paytm. The cash is turning positive. The cash levels has been going up for Paytm, and also the lending book and also the digital payment business has been quite robust for Paytm. So these are the factors that helping Paytm to regain from the bottom levels. But one should need to think the stock has corrected nearly 60-70% from its peaks. So some kind of value buying we are witnessing in Paytm. For a longer term investors who have a high risk appetite, they can definitely inch into Paytm. They can take their positions in Paytm. But short term to medium term trades, one need to be extra little bit cautious, and they need to have a strict stop losses when executing the trades in the medium to short term. But overall, the stock is showing resilience with respect to their business model, and once as per the management guidance, once they turn cash positive and get into profits, that is the time the margin of safety can go up in Paytm in the longer term.
Right. We do know that Paytm's share prices have been on a downward trend ever since the company got listed, in 2021 on November 18th. And, from that time, it has been a very, very tough period that the company has gone through, and also a lot of other companies from this space. But even from the lowest levels of, say, 441, there has been a recovery for Paytm to about 689 levels now. In fact, even in this year so far, we've actually seen 2023 has actually panned out to be decent one for Paytm so far. The stock has risen 30% odd, and right now it's trading with robustness as well. What are the kind of targets that you would expect on Paytm as a fair value going forward from here, and what would you really advise investors to do? Is it a time to slowly and gradually keep accumulating the stock in their portfolios now?
Yeah, for a medium to long-term investor, definitely this is the fair value zone for Paytm. For investors have a at least a 4 or 5 quarters horizon, that is more than a year, can look forward for a price range of 1,000 rupees for Paytm in the longer term basis in the near term. But any dip in the stock, okay, this is a accumulation phase. One need to accumulate in a phase manner. There is no need to jump and buy these stocks at this point of time. Okay, on a down day, they can accumulate these stocks for a longer term basis. But those investors who have the boldness, who accumulated the stock, who bought the stock in the bottom of the range around 450, that range, they made real money in Paytm counter. But those
Yes.
people who are exuberant and invested during the IPO time, they really lost their money. So it's between the pendulum is turning between the greed and fear. Whenever there is a fear and the price, when the investor gets, traders get good valuations, that's the time one can look into these stocks with boldness.
Okay, understood that as well. Some other stocks that are in focus today, I'd like to take your views on that as well. Apart from Paytm, the heavyweight counters, HDFC Bank, both of them I did mention about them in the opening comments as well, and how the pressure in some of these financials have dragged the sentiments overall. And that's just a day after we saw very robust numbers coming in from HDFC, and also HDFC Bank touching its all-time high levels as well. How are you looking at this dip of 5% odd on both these counters? Is it a time to, perhaps buy the dip at this point in time for both these counters?
Definitely, Sakshi, without a shadow of doubt. Okay, investor with a long-term horizon, this is the right time to, I can say, jump and buy these stocks at this point of time. HDFC Bank, one can accumulate into their portfolio. This stock should be there in everyone's portfolio who are looking for long-term returns. Once this dust gets settled, once the major things get done, the stock we can witness a good amount of value buying in the coming days.
Sure.
Right now, the dust has to settle right now. One can accumulate the stock into their portfolio.
Okay. Another stock which in fact is trading sharply down in trade today is Manappuram Finance. Now this stock in fact tanked about 14% after ED, Enforcement Directorate, freezed about 143 crore rupees of an assets. Now this is following the outstanding illegally collected deposits that have been mentioned, which are the proceeds of crime and have been detected to be 143 crore rupees. When the RBI detected the same and directed the return of the amount to the depositors, the accused have actually responded to the RBI saying that they have returned the money to the depositors, but ED investigation has revealed that there is no proof of repayment or KYC of the depositors as well. Now, this is definitely a pressure point for Manappuram Finance. How do you really look at this development? All those investors who have the stock in their portfolio, this is definitely a painful day to look at. But what goes forward from here on, and what should be the strategy that one should adopt here?
If an investor is holding this stock and if they're on profits, uh, this is the time to exit the stock because of these are the serious governance issues.
Yeah.
So one can avoid the stock at this point of time because it's coming from different government authorities, and in the medium to short term, one can avoid the stock at this point of time.
All right. Well, thank you so much, Mr. Batini, for being with us on the show and discussing these various pockets, the stocks and the sectors that one should be really looking at this point in time, and the strategies one should adopt at this point in time. Well, the markets, if we continue to look at, are trending downwards. 400 points of a cut for the Sensex right now. Again, for both these major benchmark indices, it's a 0.6% of a cut. 18,146 currently for the Nifty. That's down by over 100 points, and 61,355 for the Sensex, down by about 400 points in today's trade. We'll have to continue to watch out for whether the second half of trading action, the last 2.5 hours of trade, really have something which the markets can latch on to for a bounce, or would we really end this week on a somber note as well. We'll continue to track all the momentum of the market, and you can do that by staying with us on Business Today TV. So don't forget to subscribe to this channel, and also continue to engage with us on our other social media platforms, that's Facebook, Twitter, LinkedIn and Instagram. Until then, thanks for tuning in.